What's happening, guys, and welcome back to another Sunday Scan. I hope that everyone had a fantastic weekend, and we have a lot of great things to go over today, so let's get right into it. We're going to stick with the same format where the first half of Scan, I just run through a bunch of charts, a couple of market thoughts, just get you caught up on what was moving this past week. And then in the second half of Scan, I'll bring on a special guest, Dawson from Investors Underground, who's just a great trader, a great contributor in there, and he's going to come on to share some of his main watches, and I'll share my main watches for that section. So let's get right into it. We had an eventful week. One of the first things that I want to touch on is that this past week, they switched to T+1 settlement. And so it used to be T+2. And so what that means is that if you place a trade, it used to take 2 days for your money to really settle, and then you to be able to use that cash if you're trading a cash account. And so with T+1, basically they just took a day out of that equation. And so if you place a trade on a Monday, then your money should be settled by the following day, Tuesday. And so that's a very positive development, I think, in the trading world. And for people who trade cash accounts, I think that's a big positive for them as well. So that's just something that was moving this week. We've had a bunch of earnings plays. We've had some gaps up, some gaps down, and we'll go over some of those a little bit later on. And then I want to touch on a few things with bond yields, with what the Fed's talking about, and some of the economic data that's leading to that. And so if we look at SPY or SPX for the week, I typically use SPX. You can see the first half of the week, we really had some pressure in the market. And a big reason for that was the surge in bond yields. And so as we were approaching more economic data, the Fed's really been on the path of higher for longer. And so that just means that interest rates are, over 5%, and they basically can't bring those down right now until they start to see some convincing evidence that inflation is starting to not just stall, but also to come back down. And so we had a huge ramp up in things like the 10-year interest rate, the 10-year bond yield this past week, and that was partly due to anticipating some of the economic data. And then another part of that equation is the bond auctions. And so we had, over $100 billion in bond auctions over the last week. And so what happens is, especially as bond yields are rising, the Treasury Department will have these bond auctions. So they have them, once a week or several times a week, depending on which bond they're kind of auctioning off. And what will happen is if they're auctioning a bunch of bonds at the same time that rates are rising or bond yields are rising, a lot of times you have bad auctions. And what that means is that there's not enough demand to really fill those auctions or to basically absorb all of those bonds that they're putting onto the market without moving the bond yield up. And so that's really what we saw. We had a 7-year note auction. We had a bunch of different large auctions come to market, and a lot of them didn't go super well. And so that was another reason for the spike in bond yields. And what that can do is put pressure on the market like we saw in SPX, and especially in things like IWM and some of the more interest rate sensitive sectors like small caps that can put a lot of pressure on it when bond yields spike. That was a big part of the past week. And then I also wanted to touch on, this crazy day that we had on Friday with SPX. And, this seemed like a huge, absurd kind of move out of nowhere. But I just want to give a couple of thoughts on why I think we had this, giant rebound on Friday. And I think that there was a couple things that played into that. One was kind of the stage set into Friday. And so what I mean by that is that you can see we had pressure all week, and you had, the VIX rising, you had puts being bought, and you had it flush all the way down a little bit under that 5,200 level. And that was where what's called like a put wall is. And that's basically where, the options market is pricing almost like a bottom in the underlying market. And so there's a ton of puts all right there. And so what can happen is that if anything kind of jolts it out of that range, then all those puts can come off, and that can shoot the market higher. And so we've talked about, like with things like NVIDIA and with SMCI, as call buying really ramps up on some of these names, and it can cause them to really go higher. And then on a Friday, you have those call options come off and we flush. it's like the opposite of that happening in the index, where if all week you have tons of put buying, you have the VIX spiking, and you get down to a level where it's not really going any lower, and then you have an event basically cause a little bit of a reversal, that can exacerbate the whole move, and you can get all those puts melting off, and you basically have a reverse, a big reversal move happening. So the options market was part of it. And then there was also the MSCI rebalance, which is you have these very large indexes that rebalance every 6 months. And then it was also the end of the month. And so you had some other indexes rebalancing. And so I think you really just had a perfect storm where the stage was set with, you had tons of puts, you had some good economic data, or at least some inline economic data, which helped boost the market. And then you really had that index rebalancing, which can cause huge amounts of buying. It can be billions of dollars, especially towards the close of the day as they rebalance into new positions. And you could see like the Dow had its best day of the year due to that rebalance. And so I think all those factors came together to really contribute to that huge end of day squeeze. Now, it's some of this, it's easier to see in hindsight, but if you are prepared and if you do look at some of these factors, you can at least have an idea of what's going on. But I won't claim to say that I traded it perfectly, and I don't think a lot of people did, but it's nice to know, for the next time there's a big end of month or a big rebalance happening, you can look to see, is the stage set for a large reversal, or could this be a non-event? So that's something that I wanted to touch on. And then a couple of things were really moving over the past week, and that was ANF. So a lot of these names have been having earnings gaps, either up or down. And with ANF, you had it report its best first quarter on record. And so this has really been a turnaround story, or a turnaround name, where it's, Abercrombie & Fitch. We think that it kind of went out of style 20 years ago or 15 years ago, but they've really pivoted the brand. They've had a lot of influencer marketing. They've branched out into new international markets. They've added a bridal sector to it. And so you just have a big turnaround in the business itself. So it's not just a name that's gapping up on nothing. There is actually fundamental reasons for it. And so that was a name that was in play this week. And I'll touch more on the main watches. I'll get into a little bit more about what I'm watching for it for the upcoming week. CRM, another earnings gap. This one had strong profits, but the revenue was a little bit weaker. And so I feel like in this market, especially with some elevated bond yields or some higher interest rates, some of these tech names that unless they're reporting really stellar earnings, a lot of times they're flushing out. And so what I'll be looking for is to see, what happens after the flush. And you can see this one had a bit of a rebound already. But what I'm looking to see is, does it, rebound a little bit, and then does it remain heavy and start to make new lows? Or does it, a big flush, does it start to rebound and then base? And then it could maybe work towards filling that earnings gap. So that's another name that was in play this week. Dell, this is one that I've been watching on the long side earlier on in the week. It's had a very strong month, but then it chugged all the way up until earnings and then gapped down, 19% on earnings. And so we'll see, it's going back to these levels from, about 2 weeks ago, which, yeah, it's a big gap down, but it's also come up a long way. So we'll see if it's just kind of resetting the tape, or if it's actually, starting a bearish trend. They reported earnings and they did well on revenue, but not so much on profit. And so again, unless everything's going perfectly, a lot of these names are gapping. So Dell was another name that's in play this week, and I'll be looking for a similar situation where, does it gap down and does it start to rip back up and, make some progress back? Or does it gap down and then try to retest and stay heavy and flush and make new lows? NVIDIA, we had a really nice move towards that 1200 mark. It didn't quite get there. It got to 1165. And then on Friday, I think some of the call options that were on it were melting off, and that added some pressure along with the market. But they have their split coming up, their 10-for-1 split on June 10th, I believe. And so over the following week, I still think that we can get past that 1200 mark. And then I think once we see the split, it'll kind of be in a new regime. And that can kind of reset, the market thoughts on it a little bit and just see how it trades in that new range. So NVIDIA is definitely a name that has been in play consistently over the last year. So the next chart for the week was SAM, Boston Beer Company, and they had breaking news on Friday that someone was going to take them over. And so a lot of times when you have these breaking news trades about a takeover, you have a couple advantages with them. The first one is that takeovers usually happen at a premium, sometimes 20, 30, 40%. And so if you can catch the news early enough and it seems legit, if you get in before the first halt or even after the first halt, as long as it's well below that expected premium range for what the takeout is supposed to be, you can usually get a pretty clean move up. And you can see that it had this first bar here, the news broke and then it halted, but then you had still significant range and you could use prior bar lows to ride that all the way up if you're a breaking news trader or if that's in your wheelhouse. So that was a nice opportunity on Friday. The next chart we have is PEGY, and they recently had news that one of their subsidiaries had a deal going. And you can see kind of these long trend lines of, higher lows. It finally started to break down a little bit. And so what I would want to see if you're looking for something like this backside is to get a swipe move back up, get to stuff back down under key levels, and then you can start to see the backside of the move. So that was another name that's been in play. We had BNAI. This was a really nice liquidity trap setup. Both Dawson and Nate were trading this one. They had that first volume day here where the stock spiked up, big volume, and then it kind of dropped off and consolidated. And that's really what we look for these liquidity trap type of moves. And they have an upcoming catalyst on June 5th. It's like a virtual AI event. And so you still have some interest in it. And once you saw that volume come back in and it broke above those prior highs, that was a really nice move that a couple people in the room nailed. STSS, this was another one that had a recent catalyst, and you can also see that this is likely on the backside of the move now. Once you have that kind of swipe test back up to prior highs, breaks down, then you have the volume profile change, and now it's under key levels. This is most likely on the backside. So just running through these really quickly to get a feel for what's been moving. SMTT, they had positive phase 3 clinical data come out, big spike up to about that 12 area, and now you can see the volume's still there, but it's starting to consolidate a little bit. So we'll see over the upcoming week if it starts to base and the volume dries up, and then maybe the volume comes back in and it starts to squeeze out again, or if that was really the move and now it's looking for the backside. NVOS, this is one of those companies that they put out some ridiculous press release. Everyone's looking to hammer in short. It's going to fade back down at some point, but it usually traps the first round. And so you can see big spike up. They had news that they could do potentially a $5 million share buyback at some point in the open market. So got some people excited about it. And you had that big volume day come in. So we'll see over the next couple of days if the volume dries up, if it holds that base around $1 or in the mid 90s, and then the volume starts to come back in and it squeezes out, that could be a big trap for people who are just a little bit too eager to short it back down, rather than waiting for that swipe test, waiting for the volume profile to change, get under key levels, and then confirm, because there should still be plenty of room on the downside. But for a name like this, it's really just about avoiding getting stuck in the trap if you're on the short side. And if you're a long, biased trader looking for something like this, I would have a hard stop in place in case they, pull anything or in case the bid gets pulled. But you could potentially look for something like a liquidity trap playing out over the next couple of days. ASTS, they had a big deal with Verizon, $100 million contract for some of their things. And you could see a nice looking chart, higher lows, basing and consolidating. So what we could see over the next week is maybe we base around that $8 level. If it holds, maybe swipes down a little bit, reclaims, and then could have a final push out before the move comes back in. LIDR, this one's been running nicely, kind of a similar chart to PEGY. This had recent earnings, and this has just been holding that trend line and those higher lows along. You can kind of see that this is a transitional day, or this is a day where they a big position was loaded in, lots of green volume, but it's still holding and consolidating. And so that's kind of the difference between some of these names that they had that big volume day and then they have a clear out move and they, stuff back down, versus the ones where it's like someone positioned in it and it's holding until maybe an eventual press release or until it gets to a certain level. They blow it out and then let it fade back. And then GVH, again, another recent catalyst, spiked up, but you can see how instead of a liquidity trap, so you do have that big volume day here, it's spiked up, but when these fade a little bit more than 50% or so, you can start to have more of a clear out move setting up rather than a full-blown liquidity trap. And what I mean by that is you can still have that squeeze back up to close to the highs if the volume comes back in, but the liquidity traps that I like, when they spike up and they retrace, the retrace is a little bit more shallow, more in that like 30-40% range. But once they start getting past that 50% range or more, it just becomes harder to break those highs. So it can happen, but I usually look for these as just a big clear out test instead of a true liquidity trap and then looking to build higher. And so those are the had on watch. Just wanted to run through a bunch of them, give you some ideas. And now for the next section, we're going to announce the t-shirt winners, and then we're going to bring on Dawson. So the t-shirt winners for this week were Artball 2486 and Philly 1 to go. Congratulations, you have both won t-shirts, and you can email webmaster@investorsunderground.com to claim that prize. And now, before we bring on Dawson, I want to give a disclaimer that neither he nor I are financial advisors, and this is not buy or sell recommendations. These are for informational and educational purposes only. So let's bring on Dawson. All right, we have Dawson on this week to share his main watches. So Dawson, he's been a key member in the room for a long time, very active, always sharing his ideas, adding a lot of value, and we were happy to bring him on this week. So Dawson, thank you for coming on. How are you doing?
I'm good. Happy to be here. Happy to share some watches, and not my typical thing to get on video and start chit-chatting with people, but getting out of my comfort zone and doing this kind of thing is fun.
Yeah, absolutely. And Dawson just dropped a great interview with Anthony that everyone should check out, and we'll link it in this video. But Dawson, for those people who don't really know you yet, what's your trading style, and like what kind of trader are you?
The first step is wearing a green shirt for a green week. That's step one. Step two is my style is kind of it's a daily chart, big picture style. I avoid day one gappers like the plague. I try not to trade those as much as I can. But I put big percent gainers on watch, and I look for some sort of daily structure to start to build up. Whether it's a multi-day breakout, something that's run big on the front side, consolidating near its highs, looking for a secondary leg, or some sort of mean reversion if a daily chart gets extended to the upside or the downside, looking to play a bounce. But it all stems from the daily chart to give myself a bias, and then go down to the intraday on how to trade it.
Excellent. Yeah, I think that in your recent interview, you mentioned a quote from Jack Kellogg where he said that the daily chart gives you kind of an idea of what to trade, and then the intraday gives you an idea of how to trade it. Is that right?
That's very accurate. He came up with that quote. We were sitting there trading one morning, and he just said that off the top of his head, and I was like, I'm going to write that thing down because that's exactly what I do.
Awesome. Well, yeah, I can't wait to get into some of your main watches to see what you have for the week. So let's get right into it. What are you watching, and what has your attention for the week?
Alrighty, yeah, we'll go to ONMD first. Going to this same kind of thing, daily chart, big picture structure. This kind of front side of the move is what puts it on my radar. And this yellow line here is the 4 EMA. So for a big picture trend and momentum to carry on, I'm looking for it to kind of build over that. And zooming into an intradaily, you can see this over under kind of 210s level, and then 320 is giving this thing trouble. So as long as it continues to build over 210s, I'm going to keep this on watch. It's a higher low to this prior 170s, and I'll be looking for this to build towards 320s and potentially play a multi-day breakout there. Next one, we have MNTS. So a setup that's been in play lately is sort of this like 1, 2, 3 move, where you get this transitional day. We had Agba did it over here, where you get this big move, consolidate for one day, and re-break out. You had BNED did it over here. Volume comes in, one day pause, third day move, and then BNAI most recently on Friday. Some great callouts in the room on this one, but you get that big one day move, volume dries up and consolidates for a day. You get those wicks on the lower side, and once this thing builds over prior levels, you get a huge blowout move. So something like MNTS, you got this big volume move. Anyone who wanted to sell the gap sold. Any new buyers came in, and this day is it's still holding trend over this 70s line. So basically, as long as this thing builds here and confirms over $1, I think shorts are in a bind here. But if it starts to fail below 70s, it's nothing I'd fight. We had what was the other one? Foxo. Same kind of thing, looking left. Here, you've got this. It's had a history of like gap up and fail, gap up and fail, gap up and fail. And recently, these gap up and fails haven't been met with much more selling pressure. The daily has kind of found a base. And this first day on Friday is the first time it's kind of held its gains into close. It's starting to break over this 44-cent line. And 60 cents would be the last line of defense before it opens up to $1 plus. So I'd be looking for dips along trend toward these 40s, and then join through that 60 break and get that move to $1. BNZI, ZI, ZI, depends if you're American or Canadian. The fade down here on the daily. They had earnings, they had an offering priced at 18 cents, some fundamental stuff going on here, but no volume overhead. This thing's starting to churn down here near the lows, and anyone who sold, especially with the offering and bad earnings, I think they sold, and I think this is like a new shareholder base down here. So I'm looking for this 24-cent trigger. And just like the volume churning here, wicks still in the lows, and a break of 24 cents, I likely join that trend. It's only got like 30 million shares outstanding. It's been trading super thick down here, but I imagine on 30 million shares, if this thing wants to thin up, it could do so. And then NVOS was a main watch for a bunch of people on Friday. And like I said, I avoid the day ones, but I just throw percent gainers on my watch list. So now that this one has had its move, it's given me more information over here, giving me a range in this 120s to 90s. So if this thing gaps up and is building over 120s, I won't long it. It's too extensive. It's too extended. But it's had a history of multi-day runs, so I'd be hoping higher the better on this. But under 97, if pops start to act as resistance to prior support, I think this thing could fade back. And if it starts to build over 120s, I'd just be hoping higher the better, and ideally get a multi-day run out of this.
Yeah, definitely. And I feel like NVOS, that's one of those names where a lot of people are looking to fade it, given the history, given the press releases that it puts out. And these are the ones that they can potentially cause like those big trap moves where, you have something that's extended, you have that day one huge volume, and then it kind of, looks like it's about to fade, and it almost does, or dips slightly, but then traps right back up. And it's really, when you're mentioning like the liquidity traps or some of these moves, there's a couple things that are really helpful when determining like whether something could be a liquidity trap on the long side, or whether it's more of like a clear out move and then people can fade it. And that's the second, basically round of volume. And so if you look at the bottom right of the screen, you see that big volume come in as it, slams up, and then it kind of consolidates up here. Once it kind of is holding those levels around there, you'll see when the next like series of volume comes in, does it look like it's just one or two like big candles kind of exhaust out and that's it and starts to fade back? or does that volume start to build like it did before? And that's a sign that it's not just a cover coming in, but it's actually longs are in there along with the cover. And that's how you can get those secondary moves. And so you just try to think about like when something makes unusual range, it's like you need groups of buyers in there. And that could be short covering, that could be new longs, that could be, people who are trapped. So when you have that secondary volume come in and make a whole new series, that's how you can get those big moves as opposed to just a retest and then slam back down and break under key levels.
And the volume profile on this, you can see kind of on this 110 to 120 range, that's where all of the volume was traded. Like it didn't really get anywhere on the daily chart. It just kind of traded sideways most of the time. This squeeze out on that one volume bar you're talking, where did it start to churn and build through those highs, or did it just push and stuff and slam right back down on bigger volume, which is exactly what it did. So I think anything outside of this channel will be edge. Anything inside of it, I think you're just going to chop yourself up.
Agreed. Well, great. Those are great watches. And I'll get into mine, starting with ANF. So we've definitely had some earnings plays over the last couple of weeks. And some of these retail names, like literally retail focused names have done really well. And ANF has been a big turnaround story from a couple of years ago. And this is Abercrombie. They have Hollister under there too. And they basically did like a whole switch with their branding. They had influencers come in. They've extended into different markets. They added like a bridal part to it. So they've like really turned the business around in a lot of ways. And you can see that the chart has had a huge move. So this is on watch for me for the week, just to see if, it kind of had like a mini blow off top, but the volume wasn't massive with that. And so what that tells me is that it could have just been like a short term kind of blow off and then consolidates and then could possibly move higher. But I'm really open to either scenario. So the first scenario that I'm looking at is if it starts to kind of base and still make that higher low from the previous one, like pre-earnings gap, it might start to just slowly consolidate and then build, and then it could have a secondary move up. Or if we see like a volume, burst come in and it slams into prior levels and then fails and acts heavy, then maybe it could fade back down. So I'm really open to using either calls or puts on this, but this is definitely a name that is in play and that I have on watch. And then another name that I have is CAVA, Kava. And this is one that I traded a decent amount last week, kind of anticipating, like, again, a big blow-off move coming. It's right around that 100 mark, and that's can be a psychological point, that can be a profit-taking level, but we didn't really have a big volume, blow-off move quite yet. So I think it could get over 100, and we could have a nice move there. And if that's the case, then I would be looking for dips or for consolidation periods to possibly play calls on it. But if we do get like a huge gap up or a huge blowout, then that could be a short-term top for a while. But these kind of recent IPO names within the last couple of years, unless the insiders are really selling, a lot of times there's no bag holders up there. There's no one to really there's no overhead on it. There's no like shares waiting to get sold unless they're coming from basically inside the company. And so that's where the action can really tell us if it's going to be marching higher or if it could be blowing off and then people are trying to liquidate some of their shares. And so the next one that I have on watch is SMCI. This one has actually been a heavier one in the AI space, and it used to be one of the ones with relative strength. But over the last month or so, it's really been one of the weakest names. And so it's not to say that I'm totally bearish on it, it's going to fall apart. But I take notice when these different names have their cycles of weakness and strength. And just like how AMD had a cycle of weakness and that was like perpetually heavy, and any time that the AI or the chip names flushed down, AMD was always the one to kind of go the furthest. SMCI feels like it's kind of taken that place. And so if the AI sector seems heavy or if we get some pressure in the market, then this could be a go-to for downside, and I would use puts for that. And then on the kind of opposite side of that for relative strength, I'm watching NVIDIA, NVDA, where this has just been the strongest of the group. It had earnings a couple weeks ago and a huge run up, got to like 1165 and then flushed down. And this is one of those names where the option activity is such a driver of it that when you have a bullish event, you can have so many call options bought that you basically that can drive up the stock until later on in the week. And then it's not so much that the stock flushes because it's bearish. It's more just that call option positioning kind of coming off, it's consolidating, and they look like big moves because they are big moves. You can have a 100-point range, but it's really just retracing to levels of earlier on in the week due to the call option positioning, in my opinion. And so I'm watching NVIDIA to see if it can build past that 1200 level before it does its split on June 10th. And then I think we'll kind of be in a different cycle once it splits. And I'd be cautious of SMCI if that announces a split too. A lot of times these names and these groups, they tend to do things in close timing to each other. So if SMCI has been under pressure and they see NVIDIA's having good reactions to a split, then I wouldn't be surprised if they tried to announce something like that too. And then the last name that I have on watch for the week is AI. This was another earnings play. This has been, on watch. It's been in and out of play for the last year or two. Basically, whenever AI, the sector makes a move, this is kind of like a squeeze name, and there's a good amount of short interest on it and everything. So this had a blowout after earnings, and so what I'd be looking for is if we maybe have a big gap up, and then because it kind of fails to follow through, and I'd be looking for some backside. But if it's just one of those names where it gaps up, kind of consolidates, dips get soaked, then it's going to probably go higher until it runs into another resistance point, has a big blowout, and then it starts to get long crowded, and then that's where the backside could come in. So again, with a lot of these names, it's about having two plans. It's not, for me in this market, it's not so much about predicting what the market's going to try to do. It's more just saying it could do multiple things and just being as prepared as possible with different names. So that way, when a new situation comes across, you have something that you've already thought out and you're not trying to scramble and think of something on the spot. So that's really what I had on watch for the week. Dawson, any thoughts on any of those?
Big picture wise, we're trading a lot different names. I'm more focused on like the sub 10, sub $20 names. So these ones, they're not even really on my radar. These are the first time seeing a lot of these. So my thoughts wouldn't be too important on these ones.
Sure. And yeah, that's one of the benefits of having people with different trading styles in the room, is because whatever resonates with one person or another person, they can kind of gravitate towards that group of traders that's trading things in their wheelhouse. But excellent. Yeah, those were great watches, Dawson, and I appreciate you coming on. And I hope that you have a great rest of your weekend. I know that you're going to do some renovations in a house coming up, so try to keep your arms and legs from getting injured before the trading week. Got to keep that intact. But yeah, thanks for coming on.
Yeah, thanks for having me. It's cool being on the other side of these things, watching them for so many years. So now being able to come on is cool.
Yeah, well, we'll have to have you back. And yeah, thanks again. And I hope that everyone has a great rest of your weekend and a great trading week ahead. And remember to like, subscribe, share this with someone who you think would benefit from Sunday Scan. So have a great week.